Under trading newsletters.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, looking good, Billy Ray, feeling good, Lewis. Well, we start the show here today on the 25th of July, and we'll be looking at the DAX index like we always do. Then we're going to take a look at wheat, and then we'll take a quick look at platinum, and then we'll also be taking a look at the wheat, platinum, and the gold market this morning. And we'll also be watching the Treasury notes and Treasury bonds because we think we've might have hit a pretty good high here on Friday. So we'll watch this very closely as we always do. We'll start out the show, of course. Oh, by the way, we're going to have Rich Anderson from Anderson Capital Management as our guest. We're going to talk about the beans, wheat, and corn at the break. And, of course, we've got a weather market going there, which we'll cover with Rich when we come on the show at the break. The first chart we're going to look at here, of course, is the German DAX. As you can see here, that we're looking at a pattern that is completing a big ABCD structure right down to that 12,000 level that we've been talking about for the last couple of days. And as we mentioned, you know, this is a time where we have a new moon. So it was either a bottom or a top. So it certainly doesn't look like a top. So we've had a pretty good bottom, it looks like, so far in the German DAX. And from what we've seen in the Dow Jones this morning with the earnings coming out, the Dow was up over 100 points at one time. That was some type of a major problem or major pattern here. If you hold on one second here, I'm seeing, oh, this is something very important, folks. Let's just get, just change gears for just 1 second because my beeper is going off. Now, one of the things that I've learned to do over the years that I learned from the, hold on just a second. When my beeper goes off, it really likes to go off. Hold on 1 second here, and we'll see here. Oh, everything is going crazy. Give me a second here. Well, these bonds are dropping pretty quick. The one I'm watching, folks, is the euro. We're at 117. Hold on 1 second. We're at 117.03. The one thing that you want to watch in the euro today is this 117.30 to 40 level. If we get to that level, we just made a new high in the E-mini S&P, I believe. Yes, we certainly did. The NASDAQ is still lagging a little bit today, but of course it made up for it yesterday. But the reason why I'm watching the euro is, let's just do it right now. Come on, just because this is important in my opinion. And of course, when I have the show, my opinion counts. But after the show, it doesn't count. Let's just look here at this euro. I want to show you what we're watching here. Because one of the things that the markets will do is they'll go up to these old levels. And if you'll notice here, the highs from 2015 come into this area right near where we are right now. That old high back in 2015 in July, hello, here we are in July, was exactly, I believe, 117.28 to 117.30. So far, we've been 117.10. What I am watching to see is if we take out that high and don't go anywhere. In other words, if we just get up there and hit it by a point or two, that doesn't mean anything. That just means it's one of these computer-generated things that's picked up the stop. So I'll be watching that one very, very closely. That's something that I think will be really important. It's the same thing that we're looking at in the E-mini S&P, up in the same level here of watching that, how that works. Now, the next one, we'll move on to some of these others because I've only got, half of a show today because we really need to talk to Rich. Let's take a quick look here at this gold market. Last night, you'll see we're having these little $5 and $8 swings all the time. And we did complete a nice little ABCD pattern down about $9 from the high. if this is a good market, it's not going to take out the 1250 level. If it takes out the 1250, that tells us that that new moon that came in yesterday up at this 1259 level most probably is going to mean a short-term high in the gold and the silver. But here again, I would be watching these for a $34 move down in gold. $34 would take you down to down to 1225. I'd really be watching the gold if it gets down to that level, because that would be one harmonic number down, and it would be right at a 78% retracement off the low of 1203. So keep a close eye on that one as we're watching it this morning. A platinum. Shucks, I don't have the platinum here. Well, we'll have to get the platinum at the break. I did want to talk just a little bit about Arch's talk yesterday when he talked about the new highs to new lows, and I wanted to bring this up here and show you what he was talking about and put this up here. You see, since since July 16th, we've not made new highs. As a matter of fact, we haven't made new highs since way back in 2013. And what we're watching here is this is a market that has had lower highs and lower bottoms. So this is a really, really tight channel. And it's telling you that even though the market's going up, it's not going up with a lot of participation. That doesn't mean it can't go up a whole lot higher, but that's what we're taking. We're keeping that to watch that pretty good. Yes, we're having some big earnings things today with Caterpillar and a few of the others that are out there. I think McDonald's had a real knockout quarter or daily or whatever it was they were looking at. But those are the fundamentals. Just like with Google yesterday, everybody was looking for something good to happen to Google, and it turned out to be, the exact opposite. So that's the main thing. Okay. All right, let's get back to these bonds for just a second here, because this is where I think they're real. We'll start out with the notes here, because this is a pattern that we've been watching for quite some time. As you can see, we did get up here to this 61% retracement here on Friday. Now we've broken quite a bit in notes, but we've broken even more in the bonds because they're a little more volatile. They're two handles down from the high already. So this is going to be an interesting one to watch. If we do get above this 126.10, then this all would change. And of course, we have the Federal Reserve in there today with their meeting, and whatever they decide to do, they will do it. So we'll watch it really closely here to see if this is going to be a big move to the downside, because it has the potential to do that, folks. And the reason why is this last rally high that we had, was nothing more than a 61% retracement of the last move, and it took 2.5 weeks to get there. So that's usually a bad sign. If we take a look at the bonds, we'll put this up here, and we'll get this here. You'll see here we missed the exact 61% retracement in the bonds by one tick, and now we're trading down in this 153. I think we're almost ready to break the 153 level. We've got down to, oh shucks, I've lost data. This is not a good idea. Well, we're going to have to figure out what happens at the break then, so we'll take a watch. Anyway, we're trading at this 153.05 level. Anything below this 153 would signal, yes, this is probably getting ready to have a pretty good move to the downside. This is what I would be watching here with this. So keep a close eye on it, 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
David White has just announced a new online course that he'll be premiering to his subscribers the evening of July 26th, The Next Wild Wild West of Computing. Machine learning will be the biggest growth area for tech companies in the next 10 years. Make sure you're ready to capitalize on that opportunity. With over 50 types of algorithms and growing, Dave White will tell you why there are so many areas for companies to apply this to their business to both sell and consume. Right now, you can get a 30-day free trial to either of Dave's newsletters, Path of Least Resistance and the Technology Insider, as well as get a 30-day money-back guarantee when ordering Timing the Trade charts. Don't miss out on the next Wild Wild West of computing as it premieres July 26th for all subscribers to Dave White Services. For all the details and to sign up today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks. And I don't get excited very much in these markets after watching them for many, many years, but this euro is really exciting for me because of the fact that where we're looking at the high of 2015 was at 117.14. So far this morning, we've been to 117.12. I really would like to see it take out this 117.14 by just a little bit and then show some signs of a reversal. And reversal, that would mean if it backed off about 30 pips, then I would know that my risk would be very, very small. The other way to handle this is to wait till it takes out the 117.14 and keep an eye on it as it's trading at that time, because if it's really good, it's going to get maybe just a tick or two above 117.14 and then start to roll over. But if it's got a lot of power and there's a lot of people in there buying, it'll explode through 117.14 in the euro and go substantially higher. We've seen this before, and we were talking about it last week, if you'll remember, when we were looking at the Australian dollar, because the Australian dollar did exactly the same thing, but what it did was it exploded through that area without any trouble at all. So that's the real key to watching these breakouts. And this goes back to the work of Jesse Livermore, who was a master tape reader. If you ever read his book, Reminiscences of a Stock Operator, you'll learn a great deal. And then also, some of these old books from George Cole and Wyckoff and some of these other books will tell you how to look at some of these things as far as breakouts. Because what you're looking for is if there's going to be a lot of buying coming in from the 2015 high. Frankly, I think they don't have that long a time frame, the people that are trading this, so it really doesn't mean anything. That's why I would like to see how it reacts to that level, because that's where you have your smallest potential risk going on against your biggest big win. So watch this closely. We'll follow it again, of course, as we go through. Now, the next one that we want to look at here, I posted the platinum chart for our good friend in Toronto, but as you can see, platinum is lagging the market quite badly. It's just barely making a 61% retracement of the highs of the last couple of weeks, much like what we did in the gold and silver markets, but it's still lagging, quite a bit. So I don't see too much going on with that. But there is one that is really interesting here that we talked about yesterday, and that is this crude oil market. We'll put this chart up because this is what we were looking at yesterday. You'll notice that we have that really strong support down there at that 45 level. I believe we got down to about 45.12, which was down about a little more than $2 a barrel. And now we've exploded and we've gone back to test those old highs at 47.30. Folks, this has potential to really, if we get above this 47.50 level again, this is what we're watching as far as another potential breakout. So you want to watch that very, very close. Okay, we got a caller from Florida. Mike, are you there? Hello? Well, looks like we've lost him. Evidently, poor connection, but we'll try to get him back on the line. We'll get that back on the line to see if this is going to be okay. It was my fault, folks. I misread something. I thought it was a private message. In matter of fact, someone was just asking me to put a chart up. By the way, the platinum chart was courtesy of Mike from Florida, not Mike K from Toronto. There's two Mike K's in there, so I had them mixed up. Anyway, this crude oil, if we can get it above this 47.50 level, and especially closing above there, we have several ABCD patterns that occur, at that level to take it out. Because if it does, then you're going to be looking at a much stronger move, to the upside if we do get that the breakout. Now we want to spend just a tad time with wheat here before we have Rich Anderson coming on. Here's what we were looking at yesterday. We were looking for the wheat to get down to the 509 level. We got there. We rallied up to 517. It rallied a little bit more than $600. Now it's come right back and it's testing it one more time. So this is going to be a real critical test here, coming in here at the wheat at the 509 level. What is interesting about this is that we have a really nice three drive to a bottom pattern, and then we also have a situation where we've touched it, and then we're coming back and testing it again exactly on the time of the new moon. And wheat moves off the new moons and full moons as well as anything that we trade, and so this should be a pretty good bottom, in the wheat market. Now, I don't want to get too far advanced, of course, with the Rich coming up at the break, but the soybean market, yesterday, folks, after the market had made its low, it went down to the 61% retracement, exploded 30 cents higher. We've since taken 20 cents of that off, but these markets are acting like weather markets. So, be really careful here. They're not for the faint of heart. And if you don't have a lot of experience trading grains, I would certainly tell you to go look at a currency or something like that, because, that's the main thing of what you're looking at. So keep an eye on it. It's going to be very, 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 very important today in wheat. And also now the soybean oil has broken out to the upside in the oil, which is a very positive sign from the soybean oil market. And it's had a lot of consolidation down here, so we could easily see 36 cents. Let's just put this up so you folks can see what we're looking at here in the soybean oil. And we just won't just chat about it. We'll talk about it. You'll see here that we're trading above this this 34.30 level now. This morning is telling us that we are breaking out, potentially making another ABCD pattern up around the 35.30 level. So it's going to be very interesting as we look at some of these things as we go through here. Now, the other one that we were looking at here was the cattle market. And, the cattle market is now broken below the 114 level. And we'll put this up to let you take a look at it, because it stopped right where it should have. on the little bit of a rally to 117, and now we're trading in that 113 area. That tells us we're going to go down to the 78% level at this 110.40 would be the best guess scenario as we look at it in the market as we go through this. So we'll watch these one at a time, and we'll have Rich on at the break, to keep us apprised of what's going on with the fundamentals. Another market, folks, that's interesting from a day trade perspective, if you like, the symmetry of the markets. If you'll take a look here at the dollar yen, you'll notice here that we're making the same retracement that we made during July 19th to July 20th, and we're doing it with an ABCD format. And that brings us up to this, 111, 50 level. And if this is still a bear market, which, we're going down, as you can see, we have lower tops and lower bottoms. This is an ABCD market in a downtrend, and that's the kind that you want to look at, to be a potential seller. So watch this very closely, because this is one that could have some pretty good legs of what we're watching. Okay, we want to keep our powder dry here for just a few minutes, because we're going to have Rich Anderson on here at the break from Anderson Capital Management. He'll give us some good ideas. Tomorrow, folks, don't miss the show, because we're going to have Stan Harley, another award-winning newsletter writer, finishes in the top 10 all the time in Timer Digest. So Stan Harley will be our guest tomorrow, which would be a pretty interesting show, along with the one with Rich today. So we'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service, Fibonacci 24/7, is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to make a little comment here. Rich Anderson's going to be tied up for the first few minutes here into the opening because this is the most important part of his day, of course, and so he's going to be tied up for at least 10 minutes, maybe even the whole time. I'm not sure, but we have to, respect his wishes because he's really kind enough to give us some great information here. Let's just go back to this euro for a second. We did hit 117.12. Now that took out the highs of 2016, but it did not take out the highs of 2017, which were 117.14. We've already broken 30 pips from the high. Oh, excuse me, that's 20. Yeah, we've broken 30 pips from the high already. So this is the first indication there's a possibility that there were no stops there. So we want to watch this one, extremely carefully because I think it's got a chance for a reversal here, only because of the fact that it's done this so many times before and there was no buying on the breakout. Now, regarding the wheat here, we're down to this level here at 509. We're trading at 508 and a half, 509 in the Christmas wheat. So we'll watch how this is going to come out, and then we'll see what's going on. Oh, we've got Rich on the line there. Rich, are you there?
Yeah, sorry about that, Larry.
No, hey, listen, that's no problem. Anytime you have to run, pal, you go ahead and take care of business. That's Elvis's favorite thing. But make sure you take care of business first, which I know you would do. But you're right. We're doing it. We're having a lot of volatility in some of these things. Look at the beans last night, Rich. Why did they jump 30 cents? I mean, was some kind of weather report?
Crop conditions.
Oh, crop conditions.
The beans deteriorated. Now, the key thing about beans is that it's an August crop in that the yield is determined by the amount of moisture it receives in August. And
yes.
The crop forecast had one more rain event in the next 10 to 12 days. And other than that, there isn't. And, you need the rain to create the pods and then fill the pods to create the beans. And
yeah,
the crop condition actually went down when they were looking for it to be steady. These are weekly crop condition reports come out every week,
Yeah.
That and just like the weather forecast, that satellite readings come down every 6 hours.
Yeah, tell the folks about how that works because you send me these updates of how the satellites are going over. I mean, we never had this 40 years. Well, they didn't have satellites 40 years ago, but I mean, it's amazing.
Calculators 40 years ago, and the phones had tails, Larry.
That's absolutely for sure. But it's amazing the information that you get. You get a pretty much overload, don't you? Sometimes.
Well, you really have to filter it and sort it out. I mean, there's overload's a good way to put it, and that's why the only way I see to be able to trade is as a technician because, I can't go through all the information that I have. I get hundreds of emails every morning, and I scan a lot of them. I read them fast, and I listen to things at double speed rather than regular speed because I've got so much to do and it's just crazy. So one of the things I focus on is on the differentials of, like in the oil market, the differentials between months are starting to show that there's some actual demand. Or conversely, when the Minneapolis wheat was on the highs, SEP wheat was on the high day was 34 cents over. Today it's roughly 8.5 to 9 cents under. That shows the physical demand. So that and technical analysis are what allow you to at least be able to, be even money with the house. The house being the professional trader or the commercial or the algos.
Rich, we have a question from one of our listeners is, what do you have to, the service that you get for your satellite things for the weather, what do those services charge, their subscribers to get those updated 6-hour satellite readings?
Well, I get all my stuff for free because I'm such a nice guy, but...
Amen to that. You certainly are.
It used to be because I'm so good looking, but now it's because I'm such a nice guy. But anyway, so the answer that I don't know. Some of them charge minimal amounts. Some of them charge lots of money. It's just like technical services. Some of them charge reasonable amounts, and I know of one technical service that costs $100,000 a month.
$100,000 a month?
Yeah.
Are you joking?
No.
Wow.
So there, there's a variety. For your average person, weather.gov, I mean, most of the satellite readings all come from the same satellites, and then they're put into these computer formulas. Now, the one we use in the U.S. is the GFS, and it wasn't doing a very good job, so NOAA, National Oceanic, Aeronautic, and whatever. Anyway, the weather people tweaked their formula a week ago, and it's acting better now. And so when you're looking for the EU model and the GF model to agree, it's kind of like saying that you're a moving average trader, and the moving average doesn't work, so you tweak the moving average so it works better.
Oh, sure.
Curve fitting. That's what we, in technical terms. Well, they've decided to recurve fit their weather model. But the actual commercials, the grain companies, there's firms that take the heat signature, and they're able to determine crop yield very, very accurately. And those are the things that the big commercials and the big funds pay for, and they cost a good amount of money because just the satellite data alone costs.
Rich, many years ago, you remember my good friend Jay Cross, but we were up at his ranch up in northern Nevada, and he had a bunch of people there from Europe, and they were cocoa and coffee traders, and there was also a couple of people from Washington, and one happened to be a CIA. I don't know what he was there, but that's what he was, worked for the Central Intelligence Agency, and he'd had a few hits and a little too much to drink, and we were chatting, and they asked him about does the CIA ever look at crop conditions, and he laughed and he said, this is how we fund all of our covert operations. He said, look, we've got satellites that'll tell us that they can read a warning label on the cigarettes from 5 miles up. He said we could certainly take a look at a cocoa plant or a coffee tree and tell them how that crop is doing. And of course, I don't know if he was just trying to be a braggadocious or something, but boy, it sure made a lot of sense that with that kind of information, they could certainly, play the games with everybody else too, which they certainly did. Rich,
there's no question. Economic research is, everybody thinks it's all about spies. It's a lot of it's economic research. I have a fraternity brother whose son is in the CIA, and he's an analyst. They're economic analysts. Absolutely, that's totally true.
Yeah, I know Jim Twentyman's brother was a CIA operative for many years, but he was in the don't talk, don't tell area. He couldn't even tell his brother what he did. So, he's those guys are pretty secretive at times. We have another question here about the cattle, Rich. We're getting down to break this 114 level, which seems to be a real key level at August cattle. Do you see anything there that's interesting?
Well, yesterday was a limit down day after a cattle on feed report on Friday that showed more than they were expecting more, but the more was more than what they were expecting, and that's what put pressure on it. I think you got dollars left on the downside before this opportunity.
Okay, listen, let's take a little break here. We'll be right back with Rich Anderson of Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I've posted a chart of December corn. As you can see, we've been in a short-term downtrend here for the last week or so, which gives us a really nice price objective down around the 381 a bushel. Rich, one of our listeners is asking us, what is your opinion, bullish or bearish on wheat, corn, and beans?
Take wheat. Somebody got too long Kansas City wheat, like 76,000 contracts. There's no reason for that. And that's a week long and it has to be shook out. Weather problems, the hard red spring wheat tour is going on right now, and they start in one part of the state and then work west. Well, they're looking at the best spring wheat right now, and as it goes further west, it's going to get a lot worse. And so spring Minneapolis is a completely different situation. It's had a nice pullback. You watch the market differentials between the months to know when the demand level exists. Keep in mind also that Canada's spring wheat crop, it looks like it's in serious jeopardy right now if you look at the weather maps for Canada. That's the other thing. You can't just look at the weather maps for U.S. You got to be looking at the weather maps of Canada. And right now, Australian wheat crop, we're coming into the critical time, and they're starting to look like their crop's going to be a whole lot less. And the U.S. government supply and demand tables they're planning on maybe a 60 million bushel import of spring wheat. And with Canada having as much or more of a problem as us, that's questionable. Now, in the beans, there was that 4% drop in the good to excellent that's popped the market yesterday. And if we don't get rain in August, you could have your yields down to 44 bushels an acre. That would wipe out our carryout completely.
Oh, boy.
Versus 48 bushels. And it's all about rain in August for soybeans. So, that's where the real ball game is right now. Corn, we've got big carryovers. I wouldn't get bearish down here. I'd be looking for opportunity. The numbers you identified sound as good as any. We still have issues in Minnesota, Wisconsin, Illinois, and the northeastern corner of Iowa has flooding. These issues haven't been solved. The corn was curling up. Now that it's cooled off, it's improving. But the crop tour for corn will start in a couple of weeks, and they'll stop, and they'll go out, and they'll count how many kernels long the ears are and how many kernels around they are. But right now, the one that's really in play for weather is the beans and the wheat in Australia and Canada. And that's really going to be a Minnesota spring wheat, Minneapolis spring wheat contract issue. That's where the bull story lies.
For sure. The other question that this one of our folks is asking is the influence of China on these markets as far as exporting our grains. Are we having any problems with these planes that are buzzing our warships? I mean, does that mean that we're going to ration beans to those folks? That I don't know, but they're still a large importer of our grains, aren't they?
Absolutely, and there's a good point to be made that they've already gone through their recession because their growth curve was they're at 18-20% and went down to 6.5, and now it's starting to come back. In the old days, we said copper, which made new highs today. Look at it, copper has a PhD in economics. But the other one to look at is iron ore. And iron ore and copper, both of them probably give you as good insight into the economy in China as anything. Geopolitical risk, the Chinese have their September, the mid-10-year political event, and they're not going to want to create too much of a trouble before that, I don't believe. So I don't think there's any major issues, and we need them to work with North Korea. We're dependent. I mean, the new internet is going to be no porn, no politics, no Winnie the Pooh. I mean, that's really pretty tight. So it looks like they're doing better. Oh, by the way, looks like they've imported 35% more silver this year than a year ago. That's kind of interesting, huh?
Yeah, it sure is. And I've been watching silver.
But I'm a technical trader. I'm just telling you things that I told you I read a lot. But,
yes, I know you do. And you have some people that read a lot, too. What are you hearing from some of your big hitters? Are they looking at any one market in particular for a potential big move?
Well, if we carry out, you have to look at the exporting countries' availability to, that's where the carryout is. China has a big carryout of wheat, but they're not going to export that. And so wheat's going to be a story, particularly if when we go to plant winter wheat, which is a Kansas City wheat this fall, if there's not the moisture, that all of a sudden Kansas City and could be a big story, and maybe even get to be as big as the spring wheat. I trade a lot of meats. I think there's value $2-3 lower in these cattle. The August cattle are probably value right here. The cash market's above where we are, and I think the cash market's going to trade steady this week and higher next week. And so there's maybe dollars back in those, and yet if you buy the back end, most of the brokerage firms don't want you trading that close to delivery. They'll have you trading in the back month, and the back month will sit still, and the front month will be the one that goes. So you got to pick your month when you're trading livestock too.
Absolutely. On the international front, anything that you're hearing about sugar?
Well, just that as our dollar gets cheaper, that makes all these commodities cheaper to the world, and that allows them to rise in price. There's a possibility of good imports developing later in the year in sugar, and that's one of these markets that a 5 or 10% change in demand, maybe changes price 40, 50, 60%.
Okay, that makes pretty good sense. Now, one other question that someone's asking is about the gold market. I mean, you just said what you're talking about in silver. Actually, gold is acting pretty nice technically from what I can see.
Yeah, it is. It's it's been a de facto currency in a lot of these countries where you've got a negative interest rate. You might as well put your money in gold because then you don't have to pay this negative interest rate. Today we've got the Greek bonds. I think they're doing $5 billion or something. The Fed Open Interest Market Committee meets today. They're going to start discussing, are we going to raise rates? They'll probably raise rates another quarter to a half because when you have a new chair, and there's the likelihood there will be a new chair, the old chair tries to get things at least back to somewhat normal so the new guy doesn't have a whole bunch of problems. And this tapering thing.
Rich, we got a caller. Rich, we got a caller from Philadelphia. John, are you there?
I am, gentlemen. Thanks so much for taking the call. Good morning, Rich.
Hi, John.
Rich, Could I ask you to address a cattle market question, please? I've struggled to find the answer to this, and I'm unable. Given that the slaughtering operation in cattle is so concentrated, of course, with JBS being a huge player, can you tell me, in the business of feeding cattle and then selling those live animals to the slaughterhouse, how much of the business is actually negotiated directly between the packer and the feeder, and how much of the business between those two is used the futures market for any purpose whatsoever?
Okay, Rich, hold that question, and we'll answer it when we come back from our break, okay?
All right.
Okay, thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, talking with Rich Anderson of Anderson Capital Management and our good friend, Mr. Z from Philadelphia. Rich, you want to go ahead and finish that question for John?
Sure. The answer is the actual amount of cattle that are bid for, it's inconsequential. On Wednesdays, there's a live electronic auction that anybody can log into on the internet and watch. It maybe has 4,000 head of cattle, and that's a weekly auction. That's once a week. The show list is the 4 major states is one of the things we watch, and that's really where the market it gets established. But often that doesn't get established till Thursday or Friday, even after the close. So,
Wow.
And in hogs, it's even worse. I mean, the percent of hogs that are actually competed for is a very small percentage, probably single digits.
Okay.
Thank you on that, Rich. Since I focused on that phrase you used, that electronic market being "quote unquote" inconsequential, that had been my understanding. Just
by the way,
one
I can
follow-up.
get the address and give it to Larry, and he can post it wherever. I don't know about your posting things, but I know he can post it someplace for you guys that might be interested.
Right. Thank you. Just one last follow-up question, please, sir. When the big packers, be it JBS or Cargill, when they're coming in, securing their supplies just in routine business, do those people ever use the live cattle futures contract, or is it all
absolutely.
just
Absolutely.
they do?
Oh, absolutely. Tyson and huge. But, take yesterday's limit down. We traded 76,000 contracts of cattle. The open interest changed 750 contracts. There weren't a lot of guys exiting to the door, considering we had limit down.
Right, yes, indeed. Very good.
Wow.
Rich, thank you so much for your time. I know you're very busy. Larry, thanks as well.
Yeah, thanks, Rich, for coming on the show. We really appreciate it, my friend.
I'll get you that address. And you can put it up.
Okay, folks, we'll see you tomorrow, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.